Interest rates. How big of an impact can they really have? The answer is surprisingly simple. Hi, this is Clint with the Stitser Real Estate Group. And before we begin, we'd like to call your attention to two links on our blog. First, if you're interested in buying or investing in real property, please click on the Search Now link. Next, if you're interested in selling real property, please click on the Property Valuation link. So the elephant in the room is really interest rates. People who are really watching the real estate market want to know, if they go up, what's it going to do? If they continue to stay low, are we going to continue to appreciate forever? There are a lot of questions around these historically low rates and what any changes might actually do to the market. And if you're one of those people, or even if you're not one of those people, would be interested to know the answer, there's a really simple rule that we have in the real estate industry, and it's called the 1%, 10% rule. So I've got a really great chart that illustrates exactly what that means. So here we go. The 1%, 10% rule is very simply illustrated by this chart that shows a $300,000 purchase price at 3.75% has a principal and interest payment of $1,389. Now, if we raise the interest rate to 4.75%, that approximate same monthly payment only buys $270,000 worth of home. So there's the rule. For every 1% rise in interest rates, we have a 10% decrease in a buyer's borrowing power. So how does that matter to Reno Sparks or the Northern Nevada market? Well, it matters quite a bit, because if we look at this chart here, we see that 49% of all the purchases from the Reno Sparks MLS were conventional. 22%, and this is since January of 2016, 49% were conventional, 22% were FHA, 8% were VA, and 20% were cash, with a small portion of some miscellaneous financing. But basically what we're looking at is 22, 8, and 49. That's 79% of the purchases rely on some sort of conventional VA or FHA financing. And if we have a raise in rates, it's a logical assumption that we're going to see a reduction in people's buying power. Now, Reno may have some resiliency amongst that because of the rapid growth that we're going to have, but interest rates are key. So the conclusion is that if you're interested in buying or selling real estate, take advantage of low interest rates. As a seller, it's a great time because buyers have more buying power. If you're a buyer, it's a great time because you have more buying power. Just buy with the idea that you've got a long-term vision in mind. So that's the rule on interest rates. For every 1% they go up, buying power goes down by approximately 10%. This is Clint with the Stitser Real Estate Group. If you or anyone you know has any questions about interest rates and how it affects their current real estate situation, we would love to have that conversation. Please give us a call. 775-393-9881 is the office line. You can reach anyone on our team. Again, this is Clint with the Stitser Real Estate Group, wishing you great success in all your real estate ventures. Thanks for watching.